Alright, Happy New Year's everyone. Right, finally we have reached into 2023, heading into the first week of January. Right, moving forward, I'll be using this chart, MESH 2023. This will be the March futures contract for S&P 500. Okay, so over here, let's start off from the monthly. Okay, the monthly we closed below this fair value gap over here. Let me just switch this up. Okay, so on the monthly, we came back up into this fair value gap, right? And then the thing is that in the middle there's this little gap down here, right? See this gap? So coming down, price created this gap and it traded through and it came back down, closing below this gap. So this fair value gap, I expect it to be a form of resistance. Okay, so this is my bias right now for January. Usually January tends to be a bearish month. So what do I want to see? I want to see a power of 3 candle, right? We open up here in January, somewhere around here. We trade up into this area or somewhere along the lines, or maybe we don't even need to tap this area, right? And then it moves lower. Okay, this is what I'm anticipating for the monthly chart. Weekly chart, right? Noting carefully that this is the monthly, right? So I'm just gonna remove this. On the weekly chart, we have a fair value gap over here. It's formed by these 3 down candles, swept the liquidity above this high here, even though it left this high untapped for this particular contract. Okay, if you go on to the main, it swept this high. Okay, so just to keep in mind, there's a slight difference. Okay, if price was to remain bearish, when the price retraces, right, this whole down move retraces into this fair value gap, I anticipate it to break down from this area, take out the low of this up close candle. Why? Okay, with confluence with this weekly gap, right, it's currently used as support. I want to see it trade below because on a daily we do have relative equal lows right here. Okay, as you can see, price just decide not to take out this low, right, finding some range bound channel down here in between this balanced price range and this order block right here and this little weekly gap, the daily gap down here. Okay, is it a weekly chart? Yeah, it's a weekly gap, sorry. So down here, the weekly gap, so it's trading right inside this channel. So what does this what does this look like for retail? Looks like a bull flag, right? If you extend it, if you drop it down to the lower time frames, there you have it, this bull flag. Okay, usually what does the retail want to go? They want to go short. They expect continuation when they see this pattern. Okay, so I want to trade against the retail, right? Because the retail logic is flawed. So this is why I'm anticipating price to come up into this weekly fair value gap, right? Even up into this daily fair value gap right here, right? Because it's still within the fair value gap, or even this volume imbalance right here, and then we break down from there. Okay, so if you draw swing high, swing low, 50% is still way higher. Okay, but if you want to take into, I mean, you do not want this kind of wicks, right? Like for example, if this wick over here, the 50% is really low down here, and the thing is that the price didn't even reach into discount before moving up. So what if we use the bodies, lowest body and the highest close? There you have it, right? So let's extend it out so that you can see it clearly. Price retraced into discount and even hitting the OT range down here. Okay, and from here we can draw it similarly, right? The highest body to the lowest body, 50% is just right around this area. It all adds up, right? You have a strong bias down here. So moving on to into the first week of January, on the economic calendar, what do we have? We have the OPEC meetings on Tuesday, medium impact. We have FOMC meeting minutes for Wednesday, and we have a 10 a.m. news driver on Wednesday. Thursday we do have a news driver on 8:15, and finally on Friday we have non-farm payrolls. So if anything, trades should end by Wednesday before the PM session, because in the PM session we do have FOMC. So I'll look for a trade in Tuesday and Wednesday going long, and on Thursday I think it's going to be a seek and destroy day, just going to be consolidating, waiting for Friday. Okay, there may be a move, but after that 8:15 to 10, I think the move will end, and it will just consolidate, building liquidity for non-farm payrolls. So let's go back to the chart. So non-farm payrolls, I'm expecting price to reach into this area and then break down. Okay, non-farm payrolls are highly manipulated. It is mostly manual interventions, so I will not be trading before the news. I will wait for 9:30, right? The opening of the markets, 9:30, right? Let's just double check. Yep, and we do have a news driver at 10. So 9:30 to 10:30 could set up for a nice trade entry. Okay, and the direction I'm thinking would be down. Right? I'm targeting this relative equal lows for the next week. And why so? It's going to be a power of 3 candle, right? We long after the open into this weekly fair value gap, towards this weekly fair value gap, right? Maybe we take out this week's high, and then after which on Friday it's gonna reach further deeper into this weekly fair value gap if it gets tapped before, or if not, it's gonna reach into this area, and I think from there we're gonna break down. Okay, this is my plan for the first week of January, and I'm just targeting this relative equal lows down here, okay, with confluence to this previous so-called support, okay, the daily volume imbalance right here. And yeah, if I'm trading on the daily time frame, I think I'm just gonna leave an order here. I'm gonna sell here. Where is the shorts? I'm gonna sell here. I'm gonna target this low. My stops will be here. Okay, so it's 2.76%. Risk to reward ratio 1.4, right? And I'm gonna create a limit order here. This is just paper trading demo. Don't try this because I think this trade is gonna take into Friday, and I'm gonna put, this is mini, so maybe just 2 contracts. Right, there you go. I'm gonna move this slightly higher by just a quarter. Right, and there you have it. I'm just gonna remove the orders so that it doesn't get too messy before the move unfolds. Yep. So why do I think that it's a good shorting opportunity over here? We have confluence on the weekly, confluence on the daily, right? The daily, this 3 drives higher, breaking down. This is the fair value gap you really want to short, coupled with breakers and all the blocks, right? Furthermore, we do have retail bear flag over here. So usually what it does is up and down. Okay, for the bear flag pattern as opposed to the retail. It happened to Tesla just a few months back, if I'm not wrong. We can go and check it out later. And these lows are just a little bit too clean. Okay, similar to this lows right here, right? Actually we don't have to, right? Because over here we do have a bear flag down, right? If you drop down to the lower time frames, moving down, consolidated around here, move up, taking out all this liquidity, and then we move back down. Okay, same thing, right? And on the 4 hours you can actually see that we have 1, 2, 3 sets of relative equal highs, right? And on a 1 hour chart it's even clearer. Equal highs here, and highs here, right? Coupled with this, and we do have a lot of inefficiencies up here as well. So it's a very nice profile okay, I would say profile. So yeah, that's my plan. Okay, so let's just take a look at Tesla. Alright, okay, so I think the retail bad flag is around this area, going down to the daily time frame. Yep, there you have it. So what happens? See this move down, consolidated around this area. What does this look like? Retail bear flag. Okay, right, it's a triangle, even more confluence, like even more similar to a flag. And what happened? Price shot up, hitting this order block, right, getting rejected multiple times, and after that continue the downtrend. Okay, this is what I'm anticipating for ES as well. So that's all for this week's forecast, and we'll see what happens on Tuesday and Wednesday. Right, if this price gets to move down this area lower but does not take out this low here, then maybe we go for this liquidity. Right, if it takes out both of this low, we'll have to see what's next. Okay, it may be forming relative equal lows with this low. There's too much liquidity lying below here. This is like a phantom trend line. Okay, retails see this as support on the way up, right? And from here it broke down, right? If you just draw the trend line, it's pretty obvious, right? Support. This is what retail thinks, right? And then it break down, and then what they are trading now? They're trading shorts, right? It's gonna come back up, squeeze them higher, and then from there we resume the downtrend. Okay, all right. Yeah, that's about it, right? And of course below we do have liquidities here. We have yet to fill this fair value gap, right? The type of ones did not trade through. Yep, so what I want to see is a complete fill of this fair value gap. Okay, and I think from this area we may find a quarterly bottom. I'm not too sure, but we may find a quarterly bottom, pump it back up, but that's too far stretch. Okay, that's too far, so I'm not gonna forecast that far. Okay, yeah, I think that's about it. Let's see how this plays out.